Good morning, everyone. Thank you for joining us for our second webinar with respect to B-BBEE transformation and the potential impact that COVID-19 will have on B-BBEE. In last year's webinar, we dealt with the ownership and management control elements of the scorecard. If you wish to listen to this webinar, it has been uploaded onto our website. In today's webinar, we're going to focus on the other elements of the scorecard. So we're going to be looking at the skills development element, and that's existing programs that are in place together with new programs. We're going to look at enterprise and supplier development, which includes procurement. We're going to look at the spend, and we're going to look at the compliance targets and how these are calculated. Similarly for socioeconomic development. We're then going to talk briefly about the YES initiative and the potential impacts on this initiative. What you must please bear in mind is what I'm going to cover in this webinar deals with the DTI codes and not the sector codes. So if you do need to comply with one of the sector codes, certain of the targets will potentially differ from what I will deal with in this webinar. And I think the important thing that we need to remember is in these trying times that we are working in at the moment, we need to look at strategies to try and maintain our B-BBEE levels with minimized additional spend. So if we move on to the skills development element, just to recap, under this element there are 20 points available, together with 5 bonus points for absorption. And these points are awarded based on the level of upskilling of Black and natural persons, and those can be persons within your staff complement, or alternatively just upskilling Black natural people. Remember here as well, if you're a large organization, the proportions in which you would be upskilling Black people would be in the proportions to the demographic population of South Africa. So your economically active population statistics and targets would apply. If you are a QSE, again, there would be a distinction between just Black and white. You would not need to comply with the population statistics. So that's just the differential in terms of the sizes of your organization. There are 2 aspects to the spend on skills development. And the one is based on actual monetary spend, and the other is based on the headcount during the financial period. And when I talk about financial period, when we're looking at skills development, it is measured over your financial period. So if your financial period is 1 March to 28th of February, that is the period during which you should have incurred the spend or entered into all these various initiatives. Again, what we must remember is it is one of the priority elements, so you must achieve 40% of the points, excluding the bonus points. So it's 40% of 20 points, which is 8 points. If you don't score the 40%, you would then run the risk of or you would be discounted by a level on the score that you achieve. So it is definitely from a generic perspective, it would be a priority element. If we're looking at the QSE scorecard, in the QSE scorecard, you have to comply with ownership in terms of the priority elements and one of the other 2. So you either have to comply with skills or you have to comply with the enterprise and supplier development priority elements. So it's an either or on the QSE scorecard. So what will the impact of COVID-19 be on skills development? So as we chatted about on Friday, a number of companies are entering into restructuring programs where they are potentially reducing their workforce, offering retrenchment packages, and all of those types of things are currently happening out there in the market. So what this would do is potentially reduce your leviable amount. Now, the leviable amount is the amount on which your skills development spend is based, and is essentially the value of your payroll for the year. So potentially your leviable amount will be reduced. Therefore, you need to relook your targeted spend and possibly change your strategies around how you're going to be spending that money. In addition to that, your targets based on headcount potentially would be less, because going forward you would have less staff in your employ. One thing just to remember is, to the extent that you are paying out retrenchments, these would be excluded from your leviable amount. So your leviable amount would exclude the retrenchment payments that you potentially would be making if you are doing those types of restructuring initiatives. The other thing that could be impacted is your ability. So to the extent that you have got learnerships or internships programs that you are currently running, your potential to absorb those learners onto long-term contracts could be impacted, in that there may not be the ability to offer them long-term contracts within your organization, or alternatively secure them long-term employment perhaps in another organization. And because we're in the position that we are, these positions may not be available for these learners, and this would then affect your ability to score the bonus points in terms of absorption. On the positive side, though, in terms of the absorption calculation, we have had clarity from SANIS in terms of how that calculation would be done. And there was some confusion in the market at one stage as to what the denominator and what the numerator is, but what the clarity has given us is that it's the number of unemployed learners that are absorbed over the total of the number of unemployed learners, as opposed to the total of all the learners. So that obviously gives a more favorable outcome in terms of that calculation than some of the interpretations that we did see initially on that. So that is a positive. Another important thing in terms of your skills development is you must make sure that you submit your work skills plan and your annual training report, and that you have the evidentiary proof that you have submitted them. Because basically, in terms of the codes, if you don't submit these particular documents, basically, irrespective of what you have spent on skills, you will not be able to claim any points if these reports haven't been submitted. So very important. What they have done is, due to the lockdown, so the deadline for the submission of these reports is normally the 30th of April of each year. But due to the lockdown period, this deadline has now been extended for this year only to the 31st of May 2020. So for this year, you have got till the 31st of May to submit these documents. What I would suggest is that possibly during the course of the lockdown period, that you get all of this done and submitted as soon as possible, so that you don't run the risk of not being able to claim your skills development points. So then, things to consider in terms of skills development, and how can we score the maximum points, but possibly limit the number of additional or the level of additional cash flow that we need to outlay. So I think what you need to look at here is look at salary-based initiatives. So, for example, do you have existing staff that could perhaps benefit from a learnership and internship, or possibly there may be a specific management course that you can identify, which are salary-based initiatives, where you have the staff in your employ, and with these types of initiatives, you claim the course fee, but also then the salary of the individual that's being upskilled. So your additional cash outlay in terms of these types of initiatives would be just the course fee, and then you would have the salary cost, which you would have been paying in any event. So I think those are the types of things in terms of looking at and re-looking skills initiatives for the rest of your financial year, to see where can we maximize spend but minimize cash flow. So then if we then move on to enterprise and supplier development. So enterprise and supplier development is made up of 3 different elements. The first one being preferential procurement. We then have the supplier development element and the enterprise development element. Each of these elements is a priority element. So, for example, for procurement, there are 27 points available. You need to score 40% of 27 points to avoid being discounted. In addition to that, for supplier development, we need to score 40% of 10 points, which is 4 points. And for enterprise development, 40% of 5 points, which is 2 points. So it's important to note that all 3 of these are priority elements, and you have to meet the 40% of all 3 elements to avoid being discounted a level. There are some bonus points available on the ESD part of the scorecard. So the one would be for procuring from designated groups. So if, for example, you're procuring from an organization that is 51% owned by a Black unemployed person, by Black youth, Black war veterans, or Black people in rural areas, those types of organizations, there are 2 bonus points available for procuring from those types of organization. If you have an enterprise development beneficiary who you were supporting previously and you are now able to graduate them to a supplier development beneficiary, there's a bonus point available for that. And should any of your either your enterprise development beneficiary or your supplier development beneficiary be able to create jobs as a result of the contributions that your organization has given, and you are able to evidence that, then there is a bonus point available for job creation. So yeah, so there are those types of bonus points available under this element. So if we talk about procurement, so procurement, as I mentioned before, there are 27 points available plus 2 bonus points for the designated groups. What we've got to remember in terms of procurement is one of the key drivers of B-BBEE. So your scorecard as the measured entity is used by your customers on their procurement element to justify the points that they're claiming for their spend with you. So it's quite important, even in the current environment, to try and maintain your current score for customers. And what we need to remember as well is procurement is something that is fundamentally under our control. So it's one of the elements that we can try and maximize with no additional cash outlay. So what do I mean by that? So for example, if we are a business, you need to procure from your suppliers and to pay your suppliers to continue in business. So from a B-BBEE perspective, what would be the best route to go is to critically now analyze your supply chain and see, well, who am I buying from? What is their B-BBEE level? And where do some of my suppliers not have favorable BE levels? Is it possible for me to change those suppliers? And where possible, it might be a good alternative to look for a supplier who can give you the same product, but with a more favorable B-BBEE level to count towards your procurement. Also engage with your suppliers and see, well, if they have got an unfavorable B level or they're non-compliant, what are they actually doing to become compliant? And have they got a strategy in place to move forward? So these are the types of questions that you should be asking, because there are a lot of points that are available under this element, and you would need to make the spend to continue in business in any event. So you need to be looking to maximize those points as best you can. And the only way to do that is a critical analysis and engagement with your suppliers. And to the extent that your suppliers are doing nothing, seriously consider possibly finding an alternative on a more favorable level. Where we do run a risk in the current environment is because of the tough training conditions and the restructuring and the lockdown and number of things that are happening in our economy at the moment. There is a risk that suppliers may have dropped a level or have become non-compliant in your measurement period. So what's important also is to have a look, because a lot of your suppliers may not have the same year end as yourself. They may also have been verified at different periods during the course of a year. So you may find that a supplier has more than one certificate that is valid during your measurement period. So it's important in those instances that you have copies of both those certificates, because provided a certificate is valid during the measurement period, you will be able to use that certificate to justify your score or what you are claiming for that particular supplier. So then you would use the certificate that is the most favorable in terms of your claim for that year. So that's also an important thing in terms of the procurement. And I think, just to stress again, it's the one element where you can maximize with minimal additional cash outlay if you're just procuring from the right people. Okay, if we, I'm going to move on now to supplier development and enterprise development. I'm going to deal with these two together, because most of the principles around the calculations are the same for both. If I just highlight the difference between a supplier development beneficiary and an enterprise development beneficiary. A supplier development beneficiary is someone who's already in your supply chain, so it's someone who you are already procuring from. An enterprise development beneficiary is someone who is not in your supply chain, but hopefully who you can upskill and support to eventually become part of your supply chain. So when we look at the contributions that need to be made to our supplier development and enterprise development beneficiaries, they're contributions to suppliers or enterprises who are small organizations. So they are either exempt micro-organizations or they are qualifying small enterprises, and they must be 51% Black owned or 51% Black women owned. So that is the initial criterion in terms of these beneficiaries. When we're looking at what the contribution is that we need to make towards these beneficiaries, it's based on your net profit after tax during your measurement period. So again, as with skills, your procurement, your supplier development, your enterprise development, this spend needs to be done during your financial year. So when looking at your net profit after tax, your supplier development contribution would be 2% of your net profit after tax. Your enterprise development contribution would be 1% of your net profit after tax. But remember as well, if you're experiencing a decline in profits or you find yourself in a loss-making position due to circumstance at the moment, you would not be exempt from these contributions or making this spend. What is then done is they look at your average last 5 years. So they calculate an average of the last 5 years net profit after tax, or they look at the industry norms, and they look at the industry norms and it's a quarter of the industry norms. So you would have three potential figures that they would base the spend on. One is your current net profit after tax, one is the average of your last 5 years, and the third one is a quarter of the industry norms. They look at the highest value, and that is essentially the value that you must spend your 2% or your 1% of. So that is important, because irrespective of whether, so if you've turned into a loss-making position this year, you would still need to make some sort of spend. It may be on a reduced calculation, or alternatively, depending on your last 5 years, you may find that it's slightly more. So it's just dependent on how that works. So it's important to, when you are planning, to do all three calculations to make sure that you don't underspend and that you maximize in terms of your points. The other thing is that is important is to look for beneficiaries that complement your business, that can ultimately add value to your business. So you may have a supplier within your supply chain who has got a lot of potential in adding value to your business. Those are the types of organizations you want to support and encourage and become more valuable in terms of your supply chain. Similarly, when you identifying your enterprise development beneficiaries, you want to be able to identify people that you can bring into your supply chain, because first of all, you want them to be meaningful in terms of your supply chain, and then if you can in the next year bring them into your supply chain, there is obviously the bonus point available. You also want to look at organizations that have the potential for growth, so then you can get potentially get the job creation from supporting them. And those extra bonus points, although would fall in possibly into your strategy for the following year, those are bonus points that can be gotten with very little additional cash outlay. In addition to this, when looking at the type of spend or the type of contributions you're making to these organizations, it can be monetary or non-monetary contributions. So what in the times that we're working in, what we need to have a look at is what can we do in terms of supporting these organizations with a minimal amount of additional cash outlay. And I mean, some examples we can think of is, for example, if you've got a huge warehouse and possibly you've got some extra space in that warehouse that you're not utilizing, but you're still incurring your rental costs each month. Possibly there is a beneficiary you can identify who you can then essentially rent that space to at a reduced rate, or alternatively at no cost, and then you can claim that support as part of your supplier development or enterprise development contribution with no extra cash outlay for your organization. Similarly, if you have some capacity in terms of your staff, possibly you can assist in mentoring or assisting your beneficiaries with things like payroll, their bookkeeping. Maybe they need assistance in preparing budgets, you know, all those types of things where maybe an existing staff member could assist them. You can then claim a proportion of that staff member's salary towards your spend. So again, you would be paying that person's salary in any event, so it would be no additional cash outlay in terms of your organization. Again, what I must stress in terms of all of these initiatives and types of things that you may look at in terms of doing, the evidentiary proof of what you're doing is critical in terms of claiming the points. So to the extent that staff are assisting enterprise and supplier development beneficiaries, keep a timesheet. Get the beneficiary to sign off on their timesheet, the staff member to sign off on the timesheet. You'll need to put the relevant agreements in place. You'll need to have thank you letters, you'll need to have the necessary affidavits. So there is a level of compliance in terms of documentation that you would need to make sure that you have. But certainly these are some examples of the types of things you could do to maximize your score with a reduced outlay in terms of cash, should you have the opportunity. So that I think is all I wanted to say on those two. If we then move on to socioeconomic development, I mean, socioeconomic development is very similar. I mean, socioeconomic development is generally falls in the vein of your normal corporate social responsibility, but it's obviously aimed at black people as well in terms of the codes. There are 5 points available. It's not a priority element, so you don't run the risk of discounting. Again, as with your supplier development and enterprise development, it's a percentage of your net profit after tax. So in this case, it's 1% of your net profit after tax, but again, the same requirements in terms of a decline in profit, or if you are making losses in the current year, you wouldn't be exempt, and the same calculation in terms of the average of the 5 years net profit after tax, or the quarter of the industry norms would apply, and again, the highest value there. Again, here, it can be monetary or it can be non-monetary initiatives. So again, if you can contribute time or something like that to supporting the organizations that you've identified as your beneficiaries, you can claim a proportion of the salaries of the staff that are going out to these organizations and supporting them. I think it's 60, there's a formula, and it's 60% of the value calculated in terms of the formula. So again, there are various things that you could do that are non-monetary, that you could save cash flow just by looking at the way you do these types of things. Yeah, so that would be very similar to the other elements in terms of the principles of the calculation. So that would be the socioeconomic development element. So that then deals with the 5 elements essentially of the scorecard. What I'm going to touch briefly on now is just the YES initiative. So the YES initiative was essentially an initiative that was brought in to try and stem and address the problem of unemployment in South Africa. And it was specifically aimed at youth, and provided you comply with certain provisions, you potentially could get enhanced recognition in terms of your B-BBEE scorecard. The effect though of the lockdown, the current economic state of our country at the moment, is potentially that the YES youth will be the first to be affected, because the measured entity may not be able to pay as a result of the restructuring in organizations. They may not be able to keep their YES youth on their payroll. This could lead to the risk of the loss of the enhanced recognition, because one of the requirements to get the enhanced recognition is the youth have to be in your employ over 12 consecutive months and have to be paid for 12 consecutive months. So if you have to, due to circumstances, miss a month or two, you would then potentially lose that enhanced recognition. In addition to this, to qualify for the enhanced recognition, there's certain requirements in terms of absorbing those youth into your workforce onto permanent contracts, or within industry on permanent contracts. And again, there may not be those jobs available for these youth, so the absorption targets may not have been may not be able to be met. What we do know is that the YES NPC are in discussions with the DTI to see if there is any relief that could be given due to the current circumstances. We haven't had any specific feedback on the outcome of all of those discussions. I suppose the challenge is that all of these things have been gazetted, and as we know, in order to change legislation, it does take time to do. So at this stage, we're just watching and checking to see, and hopefully there will be some relief that comes through. But at this stage, nothing at this stage. So just to then wrap up. In closing, do we think there's going to be a moratorium on BE compliance? No, I don't believe there will be. We haven't seen any indication from the DTI or any of the stakeholders to date that there would be any relief in terms of the triple BE compliance. So I don't believe that there would necessarily be any relief. I think what we can do in the interim is to relook and revisit our triple BE roadmap and the inputs into the our BE roadmap, because potentially we need to look at changing the nature of those inputs and looking how can we maximize what we are doing with a minimum of additional cash flow. And then I think we need to actively adapt our strategy for the post-COVID-19 outlook. So I think that's everything I wanted to cover today. I mean, if you have any questions, please feel free to contact us, and myself or one of my team will be in touch with you to try and assist you with any questions that you have. Thanks very much for your time, and I hope you have a great Tuesday going forward. Thanks very much.